Robinhood shares were on fire today. Shares of Robinhood, symbol HOOD, were up a little over 8% today. Does that mean that there are more gains ahead? That's what we're going to consider in today's Equity Empire Chart Analysis session. When most investors are throwing darts, we're looking for clues in the charts. My name is John McHugh. I'm a former Wall Street analyst, hedge fund manager, and independent trader for the better part of 20 years. The way we're going to assess today's chart in Robinhood is two simple factors. What is the direction of the trend, and are there clues in the charts as to where the institutions are stacked up trying to buy or trying to sell? The way we assess the trend is we simply look for the two most recent highs and the two most recent lows. So from high to low, low to high, and then high to low, we can see that as they move from left to right, the highs are moving higher, and as they move from left to right, the lows are also moving higher, and that is the definition of an uptrend, a series of higher highs and higher lows. So Robinhood is in an uptrend. In an uptrend, we will now be looking for a support level for a potential bounce trade. The way we're going to do that is we're going to change the time frame to hourly. So we're going to change our time frame of candle formation to 1 hour, and we can see that there's a support level right here in the 50 to 48.35 price range. And there's another support level below that in the 45.55 to 44.31 price range. So two support levels for potential bounce trades if shares of Robinhood do pull back. Now we're going to look for a clue of where there might be some resistance. And there is a clue of resistance. The first clue we have of resistance now is all the way at this high way back from February. So there is a resistance level in the 63.35 to 66.82 price range. But that'll give us plenty of upside potential for an attractive bounce trade if Robinhood can pull back to one of these support levels. So our game plan would be this. We would place a buy limit order in the $50 price range with a protective stop just below that level. Our target could be all the way in front of the first resistance level we see. So our target could be up near $62. The game plan would be to wait patiently to see if Robinhood will pull back. We would hope for a bounce off of our entry point level in the 50 price range before Robinhood would continue higher and go retest those highs from February earlier this year. That trade, if you were to take it, would have a reward to risk ratio of 7-to-1. In other words, for every $100 worth of risk you would take, you would have $700 worth of reward potential. Now, one of three things will likely happen. We will either continue higher and not pull back to that $50 price range. If that happens, we simply won't chase, we won't enter the trade, but there'll be nothing lost. If price does pull back and bounce off that level, we could potentially make $700 for every $100 worth of risk you want to take. And then the third scenario would be price pulls back and breaks through that support level, and then you would have a $100 loss. In other words, a small loss relative to the amount of reward you have. So that's the way pros construct their trades. In an uptrend, look for a support level and try to construct a trade that has substantially greater reward than risk. So hope you enjoyed today's session. We'll be back later this week for more. We'll see you then.